Hey there YouTube. So in this video I wanted to cover the 2021 gift tax exclusion. So every year you as a U.S. taxpayer are allowed to gift cash or property to whoever you want, and if the gift is under a certain amount, so the gift tax exclusion, it is not a reportable gift. If you make a gift to somebody and it exceeds this annual exclusion, then you might have a reportable gift that has to be disclosed on a gift tax return. So now for 2021, the annual gift tax exclusion is $15,000. The $15,000 number, it applied last year as well. Every couple of years, the IRS adjusts this amount. Normally it's for inflation. But for 2021, the threshold is set at $15K. So an individual can gift up to $15,000 per person without having to report the gift on a Form 709 gift tax return. Now, the gift tax exclusion of $15K applies to the fair market value of the property gifted. So cash gifts are obviously the easiest to value because when you give somebody cash, that's the value. So if you give somebody $14,000 in cash, not a reportable gift because it's under the $15K. When you're giving property, so tangible or intangible property that's not cash, you need to be very careful at valuing those assets appropriately to determine whether or not you have a reportable gift, and then if it is reportable, what is the valuation that gets disclosed on your Form 709. So let's look at an example of where we had no reporting and then where we do have some reporting for a U.S. person. So in this one for no reporting, we have Jack. He's a U.S. individual and he lives and works in Orlando, Florida. During 2021, he wants to give his brother Eric $5,000 in cash as a present for graduating from medical school. And Jack makes no other gifts to his brother Eric during the year. The $5,000 is a gift, right? So he's not paying Eric for something. He didn't do any work for him, and there's no expectation of repayment, right? So this isn't a loan. So this is truly just purely a gift from one brother to the other. So the $5,000 is a gift, but it's not going to be reportable because it falls below the annual exclusion of $15K. So no reporting on a 709 by either Jack or his brother Eric, right? Neither of them have to pay any taxes. Neither of them report this gift on a 709. Okay, so pretty simple. Here's where we have some potential reporting. So we've got Adam. He's a U.S. individual taxpayer, and he lives and works in Washington, D.C. Now, during 2021, Adam made a couple of gifts, 4 gifts to various friends and family members. So he made a cash gift of $7K to his friend Hank. Then he made a cash gift of $16,000 to his son, Brian. Then he gifted a used vehicle worth $4,000 to his friend, Mark. And then lastly, he gifted a house worth $85,000 to a friend of his named Susan. So we have 4 gifts, which are reportable, which are not. Well, he has 2 reportable gifts here. So the cash gift of $16K to his son, Brian, that's reportable, right? So it exceeds the $15,000 amount. It's cash, so it's very easy to value it. That's a reportable gift to Brian, so that has to be disclosed on a 709. And the gift of the house certainly is reportable, right? $85,000 is the value of the property. Remember, if you don't give away cash, we have to value the property, whether it's tangible or intangible, and whatever the fair market value is on the date of the gift, that's what is used as the triggering threshold, right? So do we have a reportable gift on that date or not? And so in this case, those 2 are reportable. The gifts of $7,000 in cash to Hank and the gift of a used car to Mark for $4K, those are not reportable because they fall below those thresholds. So when Adam files his Form 709, he has to report the gift of cash to Brian and the gift of the house to Susan. Now, you are allowed to report all the gifts, right? So Adam, in some cases, it does make sense to report gifts even though they're not reportable, if that makes any sense. So Adam can still list the gift to Hank, and he could still list the gift of cash, the gift of the vehicle for $4,000 to Mark. For a lot of taxpayers that are in that high net worth bracket that gift away money at or below these exclusions, they report it anyway because they want to create a paper trail that, look, I did give cash of $15,000 to my sibling, or my friend, there's no gift tax owed. I don't have to reduce my lifetime unified credit. And so for those reasons, they do report the gift even though they don't have to. But in this example, and for most people that are potentially having to file these gift tax returns, this is kind of the standard you're going to use, right? If you have a reportable gift, it goes on there. If anything falls below that threshold, you don't have to do anything. So I hope that was helpful. That covers it. I have another video on how to prepare a very simple 709. I'll put a link to it below. If you have any questions, please leave me a comment on the video. Happy to answer any questions I can and help wherever available. And I look forward to seeing you on the next video. Thank you.